you know, on the other session, I heard from Fela Durotoye one time. I think last year December, I was under his teaching, and he said something, and that thing is that the particular economic reality that we are in. I mean, this season of the economic reality that we are in, what it needs are thrivers, people who are ready to thrive. They're ready to thrive. I mean, your businesses must thrive. Yeah, you must be able to thrive. So for you to still be in business and doing business irrespective of the economic reality, it means you're a thriver. And that was the theme of our last year 25 under 25, bold thrivers. So we believe for you to be in business, you're actually thriving because you've gone above, all negativity and all challenges and all barriers. I mean, you're breaking barriers and you're doing business. So it's a great one. So I officially again welcome you to this session. So I'm just going to quickly now wrap it up by asking some question to Chihax. The last session, we had, I believe it was very, very insightful. It has a lot of impact and it was packed. So it would be great for us to hear from one, two, three people, things you picked from that last session. And I think I've done a bit of refresher for us. So quickly, I'll be handing over to Tochi now, and that would be from the last session. What was it that we took away? With a show of hand, Tochi, over to you. Thank you very much, guys. Have a great one.
All right. Thank you very much, Rotimi. We have Mr. Obinna with us. Yeah, we have Mr. Obinna on this call. Hi, Mr. Obinna.
Hi, Tochi. Please confirm.
All right. Good afternoon. Nice to have you here. Yes. We can hear you very well. Thank you. All right. So we're just going to dive into today's class. Yeah. This topic we will be talking about. Yeah. I believe I'm just going to hand it over to Mr. Obinna. So I believe we have close to 45 minutes for this class. Then afterwards we can take in your questions. Yeah, thank you very much. Over to you, Mr. Obinna.
All right, thank you so much. Okay. All right, perfect. Can everyone hear me? Please confirm if you can hear me. Or you can just leave a thumbs up is just fine. All right, perfect. Okay, so once again, so happy to be in the midst of people who are going to lead the future here, in Africa or in the world. So my name is Ozurumba Obinna, and I'm the co-founder of Jxtgotfunded. So Jxtgotfunded is an AI marketplace, a funding marketplace where both VCs and startups, are able to come together and funding happens, due diligence happens, and all that. We're able to make things easier for startups and VCs as well, right? And it's also an AI. We use AI as back model of what we do, right? And background of my journey in this space. So actually had started as a software engineer. I worked at different companies, PayPal and likes of EcoBank and all, right? And also with some VC firms as well, like Unicorn Group, as well as in the years I've been able to work with some accelerators, where we actually, help some startups raise funds, over 30 startups across Africa. And, some of them currently in Series B, being able to raise funds as to the, amount of in hundreds of millions of dollars, right? And, today I'll be speaking with you guys, on funding I'm sure maybe most of us might not really know so much of how funding happens, whether it's your pre-seed, whether it's your seed, whether it's your Series A, Series B, or whether you want to go live, you want to do your IPO and all that. Maybe most people here might not really know, but today at least you'll be getting some knowledge on how all that happens, right? So I'll be sharing my screen in a minute, and it's going to be an interactive session. So what that means is I'll be asking some questions. I also expect feedbacks from you guys, and at the end of the class, you can also ask questions as well, right? Um, all right, so give me a minute. Let me share my screen. All right. So what we'll be talking about is startup funding. So I just named it Startup Funding 101, believing that most of us maybe are not so familiar with, the funding process and all that, right? So I believe some of us will be in the category of SME, some of us might be in the category of, startups and all that, or businesses that are already running, right? So don't worry, we all will I'll try as much as possible to, put everything together, right? Um, yeah. All right. So these are what we'll be looking at: funding types, funding sources, startup funding process, funding rounds, and funding agreements. So sorry, I think I need to. I don't know why it's taking time. All right. Okay. I think before it was connected to the slides. Okay. So understanding startup funding. So we have Jxtgotfunded, as I mentioned, which is company I work in. So Jxtgotfunded is an AI powered funding marketplace. So our marketplace harnesses vast data, to transform how investors find, select, and scale the best African startups. Right. So here we have like a visual look of what the startup platform looks like. We also have what the investor platform looks like, and across board, we've been able to get people funded even from the platform, help startups as well, and also make it easy for VCs, people we've already spoken with, and they gave us positive feedbacks on how they were able to go through the due diligence processes and all that without stress. Okay, so why does a company need funds, right? A business without appropriate funds will be drowned in a sea of debt. So normally funding helps fuel, business, whether it's they need to hire people, whether it's they need to, buy, let's say, physical assets, right? And all that, right? Funding is very important, right? Funding of capital, right? So if you don't have capital while running a business, it will take you a lot of years. But funding is like the fuel you need to, quick start your business and take it to the next level, right? So the type of funding chosen is dependent on the type of business you are currently running. So, and also the current situation of the business, right? So there are different reasons why different businesses need funding, and also there are different stages in which different businesses need funding. So your business at maybe the starting point might not need funding, but maybe across the line when you've developed like an MVP, you might need a funding, or possibly when it's just in the idea phase, right? You can actually need funding then. So different reasons why a business will need funding. Number one, we have capital expenditure. So capital expenditure are funds that are used to buy and maintain fixed assets. So fixed assets like an office building or like an equipment for companies that are into manufacturing, you need like fixed assets, to be able to run it. Then we have working capital. So working capital, these are like short-term operational expenses, such as your inventory, your salary you pay your staff, and short-term debts, right? So we have debt restructuring. Businesses spend money on that as well, or need funding for that. So debt restructuring is businesses raise funds in order to restructure outstanding debts. So maybe a business actually got debt from an investor or got debt from a different company. They also need funding to be able to repay the former investor to be able to continue with their business, right? Then another thing we'll see is market expansion. A business also needs funding for market expansion, right? So maybe you want to expand from Nigeria to Ghana or to Europe or to Asia, you will still need funding to be able to achieve that. Then we have acquisition finance. So acquisition finance is when a company acquires another company or merges with another company. I mean, examples you can have when Diamond Bank merged with Access Bank, right? So that merger process, money was involved. Access Bank had to buy over, Diamond Bank, right? Same thing with what happened with Paystack and Stripe. It was a mergers and acquisition, and funds actually are needed to be able to carry out that process. Then we also have asset purchase. So businesses raise funds to purchase or replace existing equipment without overstretching its finances. So like in your business, you need to buy like bigger equipment, to be able to serve your customers. Maybe you have your customers are growing exponentially and you need like bigger equipment to be able to serve them. You also need funding to be able to, carry out that process. Then we also have R&D, research and development, so which is also a very key area. So let's say for a business that is into healthcare, you're into healthcare, or you're into pharmacology, or you're into even manufacturing, right? You need R&D funding to be able to carry out whatever you're doing, right? Because it's actually key to your business growth, right? So these are the different scenarios where a business will need funding, so now we also have different startup financing cycles, right? In every business, whether it's a small business, a big business, or a medium scale business, there is a financial cycle, and you need to understand that, right? So the first we have is inception stage. So this inception stage is or like what I call ideation phase, right? So this is where you're validating your business concepts, right? So you're asking your customers, do you like my product? You're sending them surveys, you're getting data, quantitative and qualitative data about your business, right? So you're validating that your idea is actually good to be able to run the business. Then you're building a prototype. So prototype can be as something as easy as just a landing page. A prototype can be maybe design a Figma design, right? You can play around with, or maybe a physical machine you're building, right? And also proof of concept. So proof of concepts, mostly proof of concepts happen. So like mostly AI businesses. You're building an AI platform. A POC is actually very important, right? Then business configuration. So these are things that happen around inception stage, right? Then seed stage. So the seed stage is where you're now doing product development, right? You've hired developers to start working on your application, your MVP. You've started marketing the product to people. People like the first set of users that are going to use your product. Then also you're building a management team. So then you can now start hiring. Let's say it's just started as yourself alone, but now you're hiring a co-founder, you're hiring a developer. Do you understand? You guys can even start as 4 people to start, in seed stage, right? Just the core people, let's say yourself, your co-founder, your, let's say, marketer. You need a marketing person and a marketing expert, a developer, right, to kick off the business, right? So early stage. So early stage is where you're boosting manufacturing and sales, right? And also further product development. So let's say this is version 2 of your MVP, right? So here you're actually, you've gotten customers by your early stage, right? It's required that you've started getting customers, right? By when you're in your early stage. And that's because your customers are expanding. So you need to, boost whatever product, whether you're manufacturing something, you need to boost your manufacturing more. You need to boost your sales more. So if you're not doing an ad on Instagram or Facebook, you start doing ads on these different platforms, right? Then also keep continuous development as well, right? It's very important at this stage. Then we have growth stage. So in the growth stage is you're expanding production, you're still building on your team. So if you had 6 people, you now hire 12 more people just to scale your business to make it easy for you. Then marketing and sales capabilities, expanding your marketing and sales. So now you're using things like CRM, customer relationship management system, to be able to help you scale more and automate a lot of things, right? Instead of you sending the email directly, you're using things like MailJet, you're using things like MailChimp to automate, to send emails to customers, right? Just to make things easier. So at this phase, you're in your growth stage. Then we have expansion stage. So at this stage, your geographical expansion, you're looking at expanding to other countries and all that, and also scaling your operations. Then exit stage is what we call like the inorganic growth stage. So where, let's say you've been a private company all along, right? You've been a private company all along and you want to go public, you want to go to New York Exchange, you want to go to the Nigerian Exchange, you want to list your company publicly. Okay. So anybody can find your company on the Nigerian Stock Exchange. They're able to buy shares in your company and they're able to, see your company publicly. Definitely, you have to even start bringing out reports, financial reports, because once you go public, you have to start doing financial reports to your investors, to the people who have invested in your shares and all that, right? So that's when you go public, and by then you've actually expanded and all. Then after that, we have the mergers and acquisition. That's where private equity firms come in, to either merge or acquire your company, right? So the next is the startup financial cycle. So take it a bit faster. So so in the startup financial cycle, we have, like, on the left, you have the revenue and the time. So the timeline of events as well. So in the first stage, you have where the seed stage, right? where you get your seed capital. So whether it's pre-seed that can come from your friends and family, or angel investors, right? So this is where you have it, seed capital. You have angels coming in this phase, or friends and family coming in this phase, or you're just funding from your pocket at this phase, right? Then the next phase you have where the VCs come in. So we have the first phase, which is also the early stage, where VCs comes in. Second stage, third stage, VCs actually coming around the stage. Then the mezzanine stage is where mostly private equity firms comes in for acquisition and mergers, right? So you're able to merge with other companies, you're able to acquire other companies, right? Then IPO, so where you're able to go public with your company, then able to give secondary offerings to the public markets, your shares and all that, right? So these are the different stages a startup would go through, right? From the inception to IPO, right? So we'll talk about different funding sources for startups, or for, for companies, right? So first we have the investors, right? So investors now can be VCs, angel investors, right? Private equity firms, family offices, those fall under investors. So under investors, what they do is they provide funding in exchange for equity or debt. They expect a return on investment, and they provide networking opportunities. They also advise and bring expertise, but might also demand control of your business. So those are how investors, they are, persona, right? Then we have accelerators. So accelerators, they accelerate growth of an existing company. So early stage companies might be given a small seed investment and access to a large mentorship network in exchange for a small amount of equity. It connects companies to networks of peers whose experience they can learn. So Accelerator, which is, I believe, what SME 100 is also doing, right? So where they give you access to a large mentorship network, and possibly some investments, right? Or connect you to networks and all that. So that's what accelerators do. We also have incubators as well, accelerators and incubators. They actually almost play the same role. Then we have grants or government loans. So government or banks borrow startups money, and they can later be paid as interest, but most of the time their grants are actually free. I mean, a lot of us would know, like the Tony Elumelu Foundation that gives $5,000 grants, which is literally free. You're not paying back anything, right? So, and there are a lot of them like that. So at the end of the class, so if you're still in the call, I'll be able to share, a list of these grants that you can be able to access as small businesses or as startups, right? Then grants could be given depending on the area of scale of business. So there are different sectors, capturing for different, people or startup founders. Then we have usually large funds are given and provide solid base of foundation. Then we also have bootstrapping. So a lot of founders bootstrap, right? Which is a perfect thing, which is cool, right? So using founders' personal funds to for first sales to start your business. So in this particular scenario, you have 100% control of whatever is going on, right? You don't have someone who is going to tell you you have to do this or you have to do that. You have 100% control, right? So there is higher chances for the business to fail because you don't have the right network of people to guide you. You don't have the right experience. You're not being exposed to the right people, maybe the right people where you have to import your raw materials from and all that, right? And having worked with business over the years, all these things are actually very, very, very important and critical. So we also have here very limited resources and which inhibits growth. So the founder bear all financial risks. So if anything happens, it's on your head. You don't have anybody to come and support you and all that, right? So, but bootstrapping is also good at the start, right? Just to give you that sense of responsibility of your business. Then family and friends could be a loan, donation or an equity investment from your family and friends. So this should be strictly treated as business. So a lot of us get loans or family and friend investment, and we treat it casually, right? So you should treat it as your business as well, right? So you're going to document a contract for it, and get a lawyer, possibly sign, and everybody is fine, right? Not that you squander the money on frivolities and your business didn't grow or didn't make a turnaround, right? So that's very bad. And once you start building a bad legacy for yourself, it's usually very hard, even when you're starting a new business, right? So crowdfunding. So this is where you're raising in group, right? You're raising in group. There are a lot of crowdfunding platforms like out there. I mean, popular one is like the GoFundMe. It's like a crowd, the idea of crowdfunding, how that happens. So yeah, so we'll talk about the pros and cons of these different funding sources as well. So for loans, which is like grants, so personal loans are unsecured and unmonitored, right? It does not require much documentation, neither does it require collaterals or security, right? So also another advantage is no sharing of profits or ownership. So all profits and returns achieved through a loan or any kind solely belongs to the business. Then here are the disadvantages. All loans accumulate interest. So some of these loans, right? Let's say some loans interest. Let's say you get a loan from the bank, there is usually interest, and the interest can add up so fast that you can't even realize that it has added up to that extent. Then the bank loan application process usually tasking and requires a lot of details like collaterals. Then for angel investments, so that's like angel investors are like people who have money themselves and who possibly have invested in businesses or built businesses over the years, but they themselves have that capability. Let's say they are in the network of $1 million or $20 million, and now they want to start investing in small companies or small startups. So for angel investors, the advantages are for an angel investor, they have a lot of business experience and they can provide mentor to you. They have credibility from being associated with the investors. Last, you have credibility, right? When you're being associated with such a person, then the disadvantages is that they would expect you to come up with 10x. Is usually a very popular word in angel investment, right? So I want you to 10x the $10K I give you, right? So you have to provide like $1 million or 10x whatever has been invested in your business, which most of the time becomes an issue for the startup, right? Trying to meet. And also they normally give within 5 to 7 years, which sometimes can be very short for some companies, right? While some, it's also very okay, right? So another thing is loss of control. So there's possibility of you losing control of your companies, where you have to give some shares to the angel investor. And if you have a lot of investors in the company, most likely your shares will be diluted and they might have a higher control of your business. Then we have venture capital. So venture capital advantages here, there is guidance, there's consultations, right? So a VC firm often have a team of professionals. So normally we have analysts, investment analysts who would be able to guide startups, around different things they need to do and all that, right? So there is also connections and networking. Companies will get access to professional network and connections in a VC firm. So connections to, if you're planning to expand to the US, having connections to other startups that do likely the same thing, or people that can help you in getting raw materials for your business and all those things, right? So network is actually very, very, very important. Some extent even more important than the money you get, right? Because most of the times it translates to profit. Then the disadvantages is divided ownership, right? So a lot of VCs request for let's say 50% of your business or 60% of your business. So the is usually high and that's due to what the inputs they are going to be putting into that business as well. Also, loss of excuse me, loss of control is also another thing that happens, right, when you get funding from a VC. Then crowdfunding advantages is no fees attached, right? So if a crowdfunding project fails, all funds raised will be returned to the investors, and the entrepreneur will neither gain nor lose anything. So another advantage is easy to access. So there are a lot of tech-based platforms out there that you can access crowdfunding. So the disadvantage is that crowdfunding does not prove effective for companies needing large capitals. So it works best if you need capital, let's say in less than $100,000. Then also family and friends. So I think I've mentioned quite some things on family and friends. So you see advantages, they will not collect interest. And even though they collect, it will be very low. And there's also personal relationship, people and they will give you money without collecting collateral. Disadvantages is misunderstanding or disagreement, which could damage personal relationships. Then they may financial risk, lack of networking and external advice, slow growth due to limited resources. Then accelerators, advantages we have, business will benefit from expert advice. It will also provide opportunity to meet investors. They accelerate growth, enabling the business to make months of progress, right? Disadvantages is they take some percentage equity, time consuming. You must attend all the events and all that. Not all accelerators give the same benefits. So different accelerators and different things that they give. So we have different funding types, different major funding types. So we have equity investments. So equity investment is where you provide a percentage. Normally, a business is 100%, right? You register it with CAC, and you get the I forgot what they call it, but your shareholder right documents where is 100%. Then now you have to share within your co-founder or maybe other people that have already invested in the business, and also now new investors that are coming into the business, right? So you have to give them some percentage, right? So for equity investment, you're giving them some percentage from the business, right? Then we have debt investment. So debt investment is they are giving you a loan. So loans for the promise of interest, incomes, and repayment. So loans, I'm giving you a loan of $1 million, right? In the next 3 years, I'll need a refund with 3% interest on it, right? So that's loans. So the risk of equity investment is higher, right? So the risk of investing in a company or collecting both ends, actually, both for the investor and the startup, the risk is higher. while the risk for debt is actually lower, right? Then the potential returns for equity is higher because the company can do 10x, right? But because of debt, there's a capped interest to it, right? You can It's just capped at that particular amount, right? So there's really no it's not going beyond what you need to give them back. So the potential returns is much more smaller. Then the return type, so paid dividends, you're paying dividends to the investors. Then for debt investments, there's a fixed income interest, right? So you're paying them based on the interest on the income, or the profit you've made from the business, right? So we also have so these are like a breakdown of what uh, equity and debt financing looks like. So in the nature, we have for equity finance is a method of raising funds by selling the company's stocks in exchange for cash, right? So giving them a percentage of your business for cash. Then debts involves raising funds by borrowing money from a lender with a promise to pay back at a later date. Then the risk, there's high risk factor for the investor while investing in equity, but there is a low risk for the investor in debt financing. So the pressure of repayments for equity is lesser, but the pressure for debt financing is more, because there is a timeline already, right? They're giving you a time, and it's usually debt financing, most in Nigeria, usually sometimes 3 years, 2 years, is usually much more closer than equity financing, right? Because they need their money to, come back to them. Then return to investor for equity financing, capital growth, there is capital growth for investors. For debt financing, there is interest payment. Then involvement of decisions. The investors are usually very involved in making the decisions for in equity financing, but in debt financing, they might really not care, right? All they want at the end of the day is their money, right? So they might really not care about the daily decision making of your company. Then sources. So the sources for equity financing you can get through angel investors, family and friends, crowdfunding, incubators, and VCs. Then for debt financing, can get it through banks, non-banking financial institutions, government loan schemes, and also some individuals, some angel investors these days go for debt financing. It's becoming like a very popular thing currently. Then other funding sources. So we have convertible notes. So convertible notes is where an investor is using both debt and equity at the same time, right? Where an equity at the end of the day translates to debt, right? They're able to convert their percentage equity to a debt. So it's convertible notes, right? So, and is a debt financing tool, is a debt tool actually, right? So it's literally under debt financing, convertible notes. Then safe notes, this came up through Y Combinator. They usually, every company they invest in, there is a safe. So it was created by Y Combinator to enable startup company and investor accomplish the same general goal as a convertible note. So though a safe is not a debt instrument, in exchange for money with a safe, the investor receives the right to purchase a stock in the future equity round. When one occurs, so it's subject to, paying. So how that happens is, let's say a company I want to invest $200,000 in. So I invest for the start, I invest $50,000, right? Then as a safe, I invest $50,000 now, right? Then as a safe, let's say when the company is raising so they are raising pre-seed now. Let's say when they are raising their series A, right? I want $150,000 to go into that particular funding round, then by then I'm getting a percentage of the business at that time, right? So generally that's how SAFE works, right? So yeah, it was brought up through Y Combinator, and that's how they invest in startups. Then startup funding processes. So there are different startup funding processes we have that every funding goes through, right? So to understand the timeline for you to raise money from investors, it's important to understand the entire process, right? So we have first approach investors. So how to approach investors? You can approach investors through emailing them. So I mean, cold emailing or cold calling. Can meet them in events. Also on Jxtgotfunded platform as well. When you're on board, you're able to get matched up with an investor and send them a request, and be able to start. If you, I mean, you need to, even before you start, I would recommend you at least have a pitch deck, your pitch deck ready. You have your financials ready, right? So they are actually very important things you need to have even before engaging with an investor. So you want to make that first impression to matter, right? You want to be ready even before you approach them, right? Because they will ask some of those things. Okay. Yeah, so approaching them with to use an elevator pitch or a teaser summary, then a follow-up meeting. So yeah, before we go to that, I would want to choose like 5 people who can, pitch me their business in 1 minute, right? Yeah, and I'll be able to also help you organize how to pitch better. But I want 5 people. Oh, 5 people. I hope I have time for that. Or let's say 4 people. So possibly you can raise up your hands if you want. So I can, let me stop sharing so I can see. Can I go back?
Okay, yeah, we
Okay.
have Ngozi Okoli. Yeah, Ngozi Okoli.
Awesome. So we need 4 people so we can, we can go through. All right. Okay. So you have, all right. So Ngozi, are you ready?
Yes, I'm
You can
ready. Good
unmute your
evening.
mic. Yeah, good
Good
evening.
evening.
All right. So you can let me just give me a minute so I can put the timer on. All right. You can go now.
Okay, thank you very much. I'm Okoli Ngozi Rita. I'm an exterior decorator. I source and decorate all the fittings, tools, everything needed for a space. Yes, I also deal on beddings. I source and get beddings for hotels, homes, and for all spaces. Yes. Another thing
Okay.
is that I should continue.
Yeah, continue. Still have time.
Okay. Elevating a space is what I do, and I would it's not just about the space, it's about the feeling, it's about I'm sorry about that. I'm sorry about that. Elevating a space is about bringing in what personality of my client, bringing out my client's personality, and of course, maybe what he or she needs. Yes, bringing it out through architectural designs. Through architectural designs. Yes, aside the interior, I also do exterior.
Okay.
The
Okay. Your time is
gazebo.
up. Your time is up.
Thank you very much.
I really don't know. We already took much more time. All right. So who is the next person? Olakunbi. Well, she tried. Okay, let me. Okay, yeah, let's just take everybody. Then I'll talk about. So Olakunbi, I think you can go next.
Okay. Hi, everybody. Good evening.
Good evening.
My name is Alakombe. I am a fashion garment manufacturer. I've been in the fashion business for 10 years. Um, Before now, I used to have all my businesses in one place, my men's wear, my women's wear, my men's wear, my children's wear under one brand. But over time, as I grew as a designer, I decided that, okay, it's time for me to restructure. And I decided to put a structure into my business by separating my businesses. I separated my men's wear, I separated my women's wear. And I also realized that I couldn't pay attention to all of the brands at once because I was currently growing in that moment. And I needed to recognize that I couldn't do everything at once at that point. So I focused on my men's brand. My men's brand is Odu Fashion on Instagram. And for the past, since 2020, I have focused on just my menswear until early this year when I decided to restructure my women's wear and come back into the market fully. During my restructuring of my women's wear, I realized that I am trying to break into the international market, and I am also looking to target different women in different parts of the world. And I also recognize that a lot of problems we might experience over time as designers is our time frame for us to deliver, our time frame for us to reach out to these customers, since my women's wear is ready to wear. So I decided that with my years of experience, I might as well just use the opportunity to start my garment manufacturing company. My garment manufacturing company caters to my menswear, my women's wear, and other fashion brands or individuals that are looking to start a fashion brand. So we decided that aside me doing my menswear, women's wear, I also have a garment
All right.
manufacturing company
Yeah.
which caters to everyone. So yeah.
All right. Thank you. Thank you. Yeah. 1 minute. Well done. All right. Who is the next person? Noble Grace. Grace, yeah, I think you can. Are you ready to start?
Yes.
All right, you can.
Good evening, everyone. My name is Grace Undobu, and I am the founder of Ace Recycles Enterprise, we're in Nigeria. And Ace Recycles Enterprise is a startup business that promotes recycling and help to reduce waste from the landfill, specifically PET bottles. We collect them and sell to bigger recycling facilities. What we need now is to be able to get our own equipment so that we can be able to sort and process into raw materials. We collect by door-to-door sensitization and from businesses, communities, and households. So we need this we are pitching so that we can be able to get equipment and be able to get our own facility so that we can start processing, moving from just selling to the next phase of processing. Thank you.
All right, okay. Okay, we have UTB. That will be the last person. UTB, let's go. Are you ready?
All right. Good evening, sir.
Yeah.
My name is Utu. Can you hear me, sir?
Yes, I can.
Okay. Good evening, sir. My name is Utiba Kua, and I'm the founder of UT Trends Enterprises. UT Trends is a woman-owned business that focuses on curbing malnutrition through the process, the production, and packaging of food consumables such as custard, cereals. And recently, we've just introduced a cassava flakes, Gary, whereby we have milk, Gary, sugar in one pack. Our vision is to be among the leading cereal company in Africa by 2057 and to train about 1,000 farmers in cereals. Our products are custard, cereals, and Gary, like I said, and our services. We offer training and consultancy to people that want to venture into this business. We are located in Uyo, Kwemo State, and we want to expand our production capacity because secured our brand with CAC, we've trademarked it with the Federal Ministry of Trade and Investment, and it is NAFDAC certified.
Okay. All right.
For us to achieve our mission of being among the leading cereal company in Africa, we need to expand our production capacity by having equipment.
Hello, can you hear me?
And as well.
Yes. The time has elapsed already. Okay, so well done, guys. Well done, but there is still a long way to go, right? For some of us, so what I said is an elevator pitch. So you are meant to capture what you do. If I was an investor, I don't think I would invest any money in you guys. Like if I wanted to invest some money now, your elevator pitch wasn't catchy enough to give me a glimpse of, what I want to know as an investor, right? So I want, if you have a paper and pen, which I believe you have. So there are some things, we look out, whether you're a small business or whether you're a big business, right? So first thing is, what are you building? Most of us captured that, which is great. So what are you building? For someone said she's building like a recycling company, right? Yes, which is fine, right? What are you building is the first thing. So I need to be clear on what you're building. Then I need to be clear on what problem you are solving. A lot of us didn't even mention the problem you're solving. So I mean, you can't just have a product and you're not solving any problem. Who is going to buy it at the end of the day? Is it me? I'm not going to buy. So you have to have a problem that you're solving. So if you're pitching to an investor, you say, okay, in Nigeria, we have over, let's say we have over 400 people die every day due to, plastics that have been, littered around and all that. Something that will catch the emotions of an investor. But as well, you need to do your research, right? So we have problems that are causing, issues to human beings, issues to families, issues to organizations. These are the problems that I'm trying to solve in this market, right? So problems that you're solving. Then the next thing is, how can you build this, or how are you building this product better than other people, right? So how are you building your product better than other people? So as an investor, I want to make sure that, because I know definitely someone out there is doing the same thing you're doing. I want to know that you're doing this thing better than the next person, right? So that way you can say we are using AI, or we are using, we have a website that helps gather data, right? So here you now involve using of different tools that you're using to enhance your business, right? So you're talking about that, right? How you're building your business better than other people. Then the next thing is, what have you accomplished? When you guys were pitching, I was not getting, what you've accomplished, right? So what you've accomplished is, how many customers currently do you have? Let's say for the garments manufacturing, I've manufactured 10,000 garments. We do a 5,000 garments month on month. Every month you manufacture 5,000 garments for people, and we have that. We have 10,000 customers. We have 10,000 followers. Active followers. Those are some accomplishments. We have a revenue of 10 million naira every year on year. Annual recurring revenue of 10 million. Those are like some accomplishments. I'll be like, oh wow, nice. So you're already making money, or you're already having a large customer base, because these are like some of the key things an investor will look forward to. Either you have a large customer base, or you're already making money, or you just have an exceptional platform that nobody else really has, right? So you need to tell me what you've accomplished, right? Or traction, what we call traction in investments, your traction. Then the next thing, which is the last one, is how big can your company get, right? So then you have, like, you can say, just give me 1 minute, please. So how big can your company get? So you can say in the next 1 year, in the next 2 years, in the next 3 years, we are projecting, onboarding 10,000 customers. We are projecting our revenue to hit 10x what we are currently doing. They might ask, okay, how do you intend on achieving that? You now put in steps that maybe you've put in place that you're going to achieve it. So you're thinking of expanding to Aba, to a bigger market. You're thinking of expanding to Lagos, to do more business. You're thinking of, using AI for your business, what other businesses are not doing, right? So that's how the roadmap on how you can get big with your business, right? So yes. So how big can you get? So exactly, things that you're currently working on how you can get big in your business. And I mean, you can summarize this all up in a minute, right? Just by some of these key points, right? Just summarizing it in within a minute, right? So you see Dangote, you just pitch to him about your business in 1 minute, and crazy how it would be that from that 1 minute, the quality of questions that will come out from your conversations will be top notch, right? And they'll be interested in knowing what exactly you're doing. So yes, and it's called an elevator pitch because normally when you're entering an elevator, going up with someone, within a minute, you're able to tell the person about your business and the person invests in your business, right? So that way you're able to pitch better, right? So once you've drafted out these key points, I'll give you guys time to, I guess, maybe you can send me an email or something, right? Or possibly a voice record of what you've done, and be able to review it from there, right? Because I know you guys would need more time to be able to refine it to these key points I've outlined, right? So so the next thing, I'll drop my email after the class. So sorry, I think I need to present again. Sorry. Okay, so I was talking about startup funding, right? So we are talking about how to approach investors. So your startup or elevator pitch, right? Getting a grasp of that is like very, very important. Then follow-up meetings. Once you've spoken to the person, you follow up with the person either through email or call, right? Then presentation of your pitch deck, right? You're not sending the person your pitch deck except if the person requests for it on the first, meeting with the person. So after the follow-up meeting, explain to the person about your business and all that. Then you're sending the person your business plan and your investor deck. As a business, I'm sure you guys need to have that, right? Your business plan, possibly your financial plan, and also an investor deck or a pitch deck. Then the next phase is due diligence, where the investor goes through different areas of your business to ensure that it's diligent. Then the next thing we have is funding agreements, where, so depending on your type of business, it will just be a contract. Then for most startups, it's term sheets and shareholder agreements, right? And you get your funding, you're able to follow up, how far you've gone with building your business and all that. Oh, this I need to stop sharing again. Start off. So I don't know, this annotation is actually causing an issue, making it difficult for me to share full screen. Okay, so I'll just present it this way. So we have different startup funding process. So I think we've already spoken about this, right? So I'll just go to the next, just for us to meet up with time. So the business due diligence process. So we have, so what is due diligence? So it's a process of evaluating a business from all aspects before making a purchase decision. It's often informed when buying a business, but there are many other situations in which due diligence might be necessary as well. So it's a big factor in private equity funding through venture capitalists. So it's usually performed after a non-binding term sheet has been signed, but before a formal binding offer is executed. The due diligence process is often a condition precedent to completion of a transaction. So what that means is, so once you've signed your term sheets, so due diligence happens before you sign your term sheets and also after you sign term sheets. So yeah, which is captured in this process. So the first is terms of engagement. In this stage, the terms of due diligence are decided between the parties and non-disclosure is signed. So here is where the investor and the startup agrees, right? Then the next will be operational due diligence. So operational information about the business is measured, gathered, and documented, right? So things like cost, customer base, you're able to check your costs, how much you spend in a month, your run rates, all those things are being checked. Then financial due diligence is where the financial statement data and information of the business are measured and gathered and documented. So things like revenue, expenses are being checked while doing financial due diligence. Then we also have legal due diligence. The legal and regulatory data and information of the business are gathered, validated, and documented. So things like tax payments, whether you're paying your tax, litigations, intellectual properties, all those things are being, you submit them to the investor, right? So we have reporting of information. So here we have the result of the business processes. The result of business processes is captured here, right, in report and information. So maybe other informations about the business is gathered at this stage. Then lastly, we have funding agreements. So funding agreement, normally we have what we call the term sheet or the cap, which comprises of the cap table where you have the different investors that have invested in your business, is on the cap table, right? Then term sheet is agreement. You have to agree within the investor. So there are different questions that an investor will ask you in the term sheet, right? Where you provide answers to that. Yeah. So share purchase agreement. So what is a share purchase agreement? A share purchase agreement is described as a legal contract between a seller and a buyer. The specific number of shares are listed in the contract at the stated price. This agreement proves that the sale and the terms of it were agreed upon mutually. So it's just like when CAC has issued you your share document, right? And you now want to assign some shares to an investor who is investing using equity, right? So this is where the share purchase, called SPA, the share purchase agreement comes in. So now you're allocating some shares to the investor out of your total shares. If your total shares is 100, you now want to allocate, most of the time it can be 20 million shares, right? Depending on how you want to go about it. There are different shares and I think different prices as well to pay to get, if you want to get 100 million shares, you have to pay a much more higher amount to do that. I think CAC offers that. And you can get legal guys who would also help you in doing that as well. Right. So you want to allocate 1 million shares, which translates to 20% of your company. You need a share purchase agreement to be able to execute that. Right. Then in the later stage, we also have like SSA. So SSA is now where, let's say, an investor who is already invested in your business wants to dilute his shares. So it's that SSA that you would use. It's also an agreement document you also use to dilute a previous investor or an assigned number of shares to another investor, right? So yeah. So sorry, let me confirm when we are going to stop. I have already expended time. So sorry. Okay, so I mentioned that I will be sharing a link at the end of the class, right? So I would do that. But at this moment, I would want us to ask questions, right? I want us to ask questions. So please, if you have a question, you can raise up your hands, so we can talk about it. Okay, someone has a question. All right, Sadiq, we can go.
Yes, as a startup, a one-man business, but a limited liability, registered as a limited liability company. I'm just wondering, which funding arrangement would be best suited? Is it to go watch out for grants, to take a loan, or to take debts? I know
Okay.
it should be industry specific about my company, but really, where should I be looking at?
Okay, so I would also want to know what you're doing. What area of business are you into?
I produce bags,
Okay.
travel bags, handbags, ladies' bags, fashion items.
Okay. So I would say, because trust me, there is nothing. I mean, there are some companies that has went from being a small or a medium scale business to a global brand, right? So I think there is this bag company called Nectar, right? And they've been able to raise funds, like even as a startup. So first, I would say start with grants, right? I'm going to share a link um, on that where you can get a list of grants that for Nigerian companies or for African companies, you can access grants up to $50,000, right? And all. So grants is what you start with. So once you start with a grant, you build your company into a fashion brand itself, a proper fashion brand. Then you can now think of using debt for a fashion company. I would say you use debt as compared to using equity, right? So if you've grown your company to a stage, right, you use debt, um, right, debt financing. But using debt at the beginning might, except if you have like if your business, you're sure that you're able to okay, I'll send that. You're sure you're able to raise monthly income to cater to any debts you're trying to take. But first start with grants, then debts, right? So that's what I would say.
Thank you.
All right. Okay. Does anyone else have another question? So I'm going to drop that link. Just give me a minute. Let's find it. Okay, does anyone have another question? So I dropped so once you fill if the form, you'll be given the link to the grant will be sent to you. I also drop my email and my company email. I think it's best even reaching me in my company email compared to my own email. Oh yeah. Okay. So any other question? Does anyone have any other question? I'm expecting questions. Okay, Precious, you can go ahead.
Good evening, sir.
Yeah,
Good
good
evening.
evening.
So I wanted to ask, how best can, like, especially in today's market, position yourself for like maximum growth, like in the industry? Like now, I am going into the majorly in the energy sector. So how best can I position my company to be able to make like maximum growth and to be able to meet up with like demands for products? So I can be able to demand for product sales and all that. So I'll be able to what's called keep I'll be able to keep maximizing, like keep increasing profit here over here.
Yeah, okay. So energy, what part of energy? Is it solar energy? Is it what area of energy are you focused in?
Right now it's bio.
Bioenergy. That's interesting. Okay, so how you can make yourself valuable is okay, someone dropped the comment. So the person in the clothes industry, you maybe need to connect with her. So how you can make yourself, valuable is one, knowing where your sector, where it's headed, right? If there are new technologies that you need to look out for, also look out for partnership. Partnership is also another thing, being able to partner with people. From partnership, you're able to get credibility, right? So partnering with people, um, maybe doing the same thing that you're doing. Then also, if you're offering your customers, let's say you're offering them just bioenergy. I don't know details of how your business is, right? So let's say you're just offering them pay as you go. You can even make it better by doing like a shared service, right? So your offerings, improving your offerings for your customers is also another thing you can do, right? So you can improve offerings for customer. That way you're able to get more customers, make it easier for your customers, make it interesting for your customers, right? So partnership, interesting offerings for your customers, then promotions, right? So promotions, you're promoting your business, across different channels, right? So these are like some of the things, and also keep improving, on whatever you're doing. You learn from other people who are doing similar thing, and improve on your business, right? So that's the way you can really scale to whatever amount you need to be making, your target, right? So yeah, so these are like some of the key things you need to do. I hope that answers it, Precious.
Yes, sir. Thank you very much, sir.
All right, thank you. Okay, Ijoma, you can go next, please.
Okay, I have a question. My name is Ijoma Chinze Betty. I have a question to ask. Like, um, I am serving somebody like a salesperson to somebody who owns a business, but I like to start up my own business, but I don't have the capital to start up. So I don't know how will I go about it. I have interest of starting the same business of that person, and I have the idea, but the capital to start up the business with is my problem. So I don't know. That's what I'm asking. Thank you.
Okay, I mean, it depends on the type of business, right? Um, it depends on the type of business. If and also how much capital is needed to start such business. So I think, yeah.
Okay, like let me say, because the person is into selling cement, rod, and the molding of blocks, combines the three of them together. And looking at it, it will need like, let me say, 20 million and above to start up the business. Thank you.
Okay, I mean, okay, I feel you can just start from somewhere, right? So let's say you just want, excuse me, you want to start with rods, right? Then at the end of the day, you keep growing to other areas. So I think first thing you can start with is like family and friends, right? Who can help you put together some money to start with something, right? Start from somewhere. Then also there are grants for small businesses as well that you can, which I think I've dropped a link on the group, so you guys can have access to that. So there are grants for small businesses that you can also get, possibly up to the amount for, right? So my advice is just start with, at least, let's say, rods. You want to start with selling rods, start with that one. You can't start with everything at the same time, because you also want to limit the risk, right? You want to limit the risk. Yeah, you want to limit the risk of exposure on how much you're going to put in, and you don't end up misusing funds, right? So you start with somewhere, know that okay, you're able to scale, then you start doing other ones, whether it's cement and all those ones, you can continue with that. Right. Yeah.
Okay. Yeah, thanks.
All right. Chinyere Usuji.
Good evening.
Yeah, good evening.
My name is Chinyere Suji, and I'm a baker. We're trying to carve a niche in the bakery industry by using wheat legume flour blends to produce products that are healthier alternatives to the conventional bread. We use legumes like okpa, akede, ozaki to make okpa bread, akede bread, okwa bread, and the rest. So my question is that what do I do to break into the market? Because our people are used to the conventional bread, and this one coming around, we have a market. But there is still this resistance against the new product. How do we break that resistance and penetrate the market? That's my question. Thank you, sir.
Okay. So this brings me to, there was a company that we did something with. I don't know if you guys know of Mo Baby. So we did something with Mo Baby some years ago. So they're into baby products and all that, right? So I think first thing is so there is what we call product validation, right? So you've already you've already done your mixture of products, what you want to give to your customer, right? And you get people who taste your products one-on-one. You can start with giving them your products for free, right? Then give them, and they, possibly even do a video to say, oh, I love the product, the taste is great, this is that, the that, right? You can use that video, promote it on social media, right? And that's like basic step, right? Feedback from people who have used your product. Then promote it, telling other people that this is the new way to go, right? And from there, if the product is great, you see other people will start using the product. Then the next thing to do is also to patent it, right? Hence is a formula that, let's say, not everybody is using. You need to patent your product as well, your product's IP. So you need possibly a lawyer that will help you do that, right? So you need to patent it, that your product is, your IP, right? So another person somewhere will not use the same formula and also do the same thing, and all that. And also things like NAFDAC, hence is something people eat, swallow, right? You need to get that license, right? But you need to start with people give them, let them try for free. The next time they come back, they can start paying you, attach a price to it and all that. Then promote their feedback. From their feedback, you can do a sponsored ads on it, right? On different social media and all that, right? So that way you get awareness, people start to order your product. So there is this, for me, like now, for example, there is this lady, I started ordering her because her pap is like a pap, right? In Lagos here, hardly you see people who sell pap, but she has a way where she packages her pap, everything looks nice. And it's been a while, drank pap in Lagos, right? So I ordered it from her. And to be honest, it tasted nicer than I would think, right? So another thing is the way you package your product as well also goes a long way, right? So the way she packaged it, the way she sold it on her Instagram page, people were able to easily get to see her product, let's say pap in Lagos, an hashtag that you're using all through posts you're making and all that. So I feel those are like the basic thing, then possibly from there, if you're able to grow your users to some certain level, you can possibly raise funds, from VCs or from angel investors, for your products, right? But start with the basics, start with the key things first. Gain a lot of customers as much as you can gain, from there, everything will be, easy peasy, right? So hope that answers your question, Chinyere.
Yes, sir. Thank you, sir.
All right, you're welcome. All right, Princess. Last but not the least, Princess.
Thank you so much for this opportunity. Yeah. You can hear me, sir. Good evening, sir. Good evening, everyone. Thank you so
Good
much for the
evening.
so my question is, how does a non-profit that is geared towards solving education-based problems in low-income communities, how do they move to a level of sustainability aside from getting funding from, let's say, I don't know whether to call them angel investors, because most of the time when we want to do a project, we usually rely on donations from people that have like vision, that have an interest in solving the problems that we solve. So how do we move from just depending on okay, this person likes what I'm doing and wants to give us some money towards the project? How do we move to a level of sustainability?
Okay. So I think there are different ways, right? Aside people who have same vision helping you, there's also grants, right? There are also grants, extra grants. Most of the time, they're even focused in NGOs, right? So there are grants as well that also do that. And there are angel investors, individuals who also come into play. VCs, most of the time, are very skeptical about investing in NGOs because sometimes they don't, what they're after is profits, right? So another thing I feel for NGOs, another way to scale, although I'm not so into NGOs per se, but I think from my, years of experience, right? Um, Another thing is partnerships, partnering with um, partnering with companies, that can help you scale. So, for example, if you're doing education, companies like UNESCO and all that, right? Um, or WHO, depending on which one of them, is much more related to what you're doing. Um, Also, crowdfunding is also another thing. So you need to look at areas around crowdfunding, right? So there are different crowdfunding platforms that you can use, both internationally and possibly local, or mostly international crowdfund companies. But then is your presentation of what you're doing is really what's going to help you stand out. So crowdfunding also goes a long way um, in helping NGOs, right? Um, so I would, for crowdfunding, I'm going to add a list of those platforms on. So once you guys sign up, um, the list that will be sent, crowdfunding as well will be added to that. So yeah, crowdfunding also goes a long way. Then transparency, transparency, you're updating your investors, whether through your social media, on what you're using the money to do, right? So it also goes a long way to tell people that, oh, this person is trustworthy and we can put in our money and see exactly what the person is doing with it, right? Um, yeah, so I feel these are like some of the key things, right? Maybe I'm not speaking to everything, but I feel these are like some of the major things for NGOs that they can look out for. Right. Princess, I hope that's fine.
Yes, thank you so much, sir. That was really helpful.
All right, thank you. Okay, so I think this moment I'll hand over to Tochi SME 100 so they can take it up from here.
All right. Thank you very much, Mr. Obinna. I think there was a whole lot to take in. Yeah, there was a whole lot to take in today. It was supposed to be for an hour, but everybody kept quiet till till this time. Yeah. So, but I'll just say it was a really really insightful. Yeah. So we'll be rounding up now, and we'll be having another section next week Tuesday. Informations regarding that will will be sent. But I'd like to say a very very big thank you to Mr. Obinna. But briefly, I don't know if we want to share what we've learned so far. Yeah. So maybe I'll just take a guy and a lady, that can just share some things that they've learned today. And training doesn't stop. We've already started something today. Hopefully we would continue having trainings, with Mr. Obinna. Mr. Obinna will come in and give us new tips and ideas, on how we can get access to funding. So Ontibe has her hand up, so I think she wants to share what she has learned. So we'd like to hear from her.
All right, good evening, sir. Firstly, I want to appreciate SME 100 for this valuable opportunity. I know if we were to pay Mr. Obinna, it will really cost us to have him tell us all this. The session was just so insightful and educating. And I want to say a very big thank you to our facilitator. He did just stick to it. Imagine he gave us minutes to pitch our businesses. After pitching, he said if he were to be an investor, that he will not invest in any of us. And inside us, we're finding ourselves that we've pitched. But I'm so excited that at the end of the day, he was able to let us know what we should do, elevator pitch, how we can prepare our businesses for funding, to access funding. I believe what he has listed will really help us. The problem he has, how we should identify the problem, what we do better from other businesses, what we've accomplished, the traction, and everything he has listed to us. Someone like me, I've taken note of it, and I'm going to work on it. And I believe he will give us the platform for us to rearrange what we did and what he has said and send it to him for him to review for us. So I really want to say a very big thank you. I believe, and even give us access to those fundings. I strongly believe after now our business will do well. We'll have access to funding. I want to say a very thank you once again to the team. I
All
appreciate.
right, all right. Thank you very much. Thank you very much. So please, before we end this call, make sure you copy the link, and yeah, the link and the email address, for swift communication. Yeah, but filling that form is very very important. Yeah, yeah, so that Jxtgotfunded can have the information and update you with any funding opportunity that are available. And I believe that there'll be other opportunities where you might need to send, maybe send a business profile, to Mr. Obinna, because most times and this opening can come anytime. So if we have your documents, or your business profile, it will be easy to get to you and inform you on any funding opportunities there. So last but not the least, I need a guy. The guys has been so quiet today. Yeah, most of the guys have been really quiet today. We had more of the ladies. So guys, so that we can close. Okay, we don't have anyone. All right then. So okay, we have Mr. Remy Ademiju, a very special person. All right, Mr. Remy.
Hi, everybody, and thanks a lot, Uchi. since no guy was raising up their hand, I had to. Yeah. Special thanks to the organizers, SME 100 Africa, and our facilitator. Everything the former um, person said, I agree 100%. And let me go add Jara times 100 again. Yeah, I think it was very apt. I think I was very impressed as to how detailed it was. And it looked like he was pouring out his heart. Yeah, so thank you so much. God bless you. And I mean, the hope and expectation is that we all, implement all these things and come back with results. Thank you so much.
Wow. Thank you very much, Mr. Remy. By the way, Mr. Remy would be facilitating a session, I think 2 weeks from now. Yeah, I think after this coming week, the next week. And for me, I think the topic is fantastic, Yeah, it's about entrepreneurship. I really can't place the topic for now, but I think it's something each and every one of us need to be part of here. Yeah, so thank you very much, Mr. Remy. We'll be hearing from you very soon. So, and to everybody that participated today, thank you very much. I mean, it's almost 2 hours, and well, we had some people leave, but we still have a very good number online, and I just want to say a very big thank you to all of us that stayed, from the beginning to the end. Thank you very much, and I want you guys to have a beautiful weekend. But everything we've taken from today's training is very, very important, So if we have to go back to our notes, did you guys get the recording for the first session?
Yes, yes.
Yes, we did. Yeah, we did. It was sent in the WhatsApp platform.
Okay, yeah. So we'll also make sure that we share this session with you as well. Yeah. So thank you very much again, and I believe you are going to have a good evening, and the weekend is coming. We're already at the weekend already. So how can I join the WhatsApp group? Okay, let me quickly share the link now so that we can join. Yeah, but I think that's pretty much everything for today. So for the next session, I think we're going to send an email, on what we'll be covering. Yeah, from next week, Tuesday and Thursday. Yeah. So thank you very much again. And for those that are to join the WhatsApp, I'll be dropping the link on the group. Yeah. I'll be dropping the link on the group.
Hello, sir. The link for the WhatsApp group. Okay.
Yeah, I just added the link. Okay, can I be added? Maybe we can do that. Okay, let me see if I can get the number quickly. Okay. Thank you very much, and have a beautiful evening. All right, bye. Any questions before we go? Any questions before we go? Any questions before we go, please? All right, then. Thank you very much, and have a beautiful evening. Bye.
Okay, bye.